475. Oliver Slope is with Blue Line Futures. And Oliver, last week, towards the end of the week, we just said the market was somewhat boring. Is that a good way to kind of set where we are starting the week?
I think that's a very fair assessment. And previous years I've joked around that March Madness is a bit of a holiday trade, and I honestly I believe that more and more every year. Lower price action to start the week, but zooming out and looking at this month's trading ranges for the grain markets, it's kind of like the weather in the Midwest this time of year. If you don't like the weather today, just wait a day. That's what the price action has been recently. It's just very choppy and sideways, up and down. Up a day, down a day, etc. If you look at corn, we're really just stuck in a range, 455 in that May contract on the support side and 475 on the upside. Until we get new news to really break us out or break us down from that range, I think sideways is probably the path of least resistance. And with that said, what could that new news be? Well, big report at the end of the month, end of the quarter, that could potentially be the catalyst to give this market new direction other than sideways.
You mentioned the corn. Let's bring up the soybean 1 month, and well, it kind of looks like the same thing since mid-March.
Yeah, this month's trading range for soybeans was really established in that first week of trade. So again, just largely a sideways trade. Looks like there's pretty darn good technical and fundamental support, $9.90 to $10. That's psychologically significant and technically significant, and I think probably represents a value zone fundamentally as well. If we cannot defend that, though, that could potentially lead to some accelerated selling pressure if we were to get a bearish report at the end of the month with a potential retest of those lows as a downside target. Now, on the upside, 1020 to 1030, that's been kind of the middle of the range from December to the recent highs, and that also represents the 20 and 100-day moving average. So those are kind of the levels that you want to keep an eye on. And again, I think a lot of this is just a sideways trade until we get to that report at the end of the month, which will hopefully give us new direction and spark some excitement, as we usually see as we enter the spring and summer months where volatility picks up. The conversation really focuses back in on fundamentals here in the United States.
All right. Hang on. We'll take a break. Come back. We'll talk livestock futures. Market day report continues in a moment. So the question is, are these prices inviting investment? Oliver Slopes with Blue Line Futures. Can you answer the question?
Well, funds have had a strong appetite for livestock markets really through the fourth quarter and to start this year's trade, and we've seen that kind of ramp back up. They liquidated a little bit of their long exposure in live cattle in the last month or so, but got their net long position back to 120,000 contracts in last week's Commitment and Traders report, and a new record net long for feeder cattle, just over 31,000 futures and options contracts. So the length and the fund appetite is still there in the cattle complex. I think Friday's price action, though, is a little bit of a caution flag. We had a strong cash trade Friday afternoon, saw a big move higher, and then a little bit of a rejection and actually settled lower in live cattle and feeder cattle. And if we didn't have such a big report at the end of the day, you could probably make the case that that's a little bit of a toppy price action and the potential for a blow off top. Now, this morning, we did trade a little bit higher on the open, seeing a little bit of follow through and what has been a choppy trade so far. Friendly cattle on feed report kind of keeps the fundamental landscape intact. But if we do close lower on the day or over the next couple of days, I think that would be a bit of a fundamental rejection, meaning there's fundamental backdrops for this market to rally. And if we can't hold and rally on good fundamental news, again, that's a little bit of a caution flag. And with everybody very long this market in terms of fund positioning, that is a bit of a concern going forward.
All right, a market that's now near a 3-week high is the U.S. dollar. Any thoughts there?
Well, I think you're seeing the strength in the U.S. dollar, kind of a reversion of the mean. It had gotten whacked a little bit over the last month or so, so a nice healthy retracement. And I think that's probably why you're seeing some pressure in certain commodities, such as the wheat market. That's a big one to keep an eye on. I think what's holding relatively well in the face of a stronger U.S. dollar is those precious metals markets. You and I have talked about that a while. Holding up well, and that seems to be a place of interest for institutional investment through the first quarter so far this year as well, talking about where the money is being invested.
Yeah, gold and silver have both gained well over 15% year to date. And the last one here, the energy markets, crude, has had a positive week, but still here year to date in the red.
Yeah, the crude market has been interesting. We have a little bit longer term bullish bias on the crude market. I know that there's a little bit of a bearish overhang in the sense that we're going to drill, baby, drill, and we're going to see this crude oil come back online. But I think there's good fundamental support. And even if we do, turn the spigots on, so to speak, there's not a whole lot of excess capacity. So it's not like we can just flip a switch and have all this crude oil coming in. There's no place to store it.
Yep, absolutely. Oliver, great info. We'll see you back here soon. Oliver Slope is with Blue Line Futures.